Welcome back to the quarterly call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. We're about to embark on, well, a really fascinating journey today. We're going deep into the latest from a leading cybersecurity powerhouse.
That's right.
We've poured over a huge stack of data financials, strategy, and, a pretty compelling look at the future of digital security.
Yeah, there's a lot there.
So our aim today, it's really to unpack all of this, pull out the most important bits, and help you understand what it all means for cybersecurity overall, especially with things moving so fast.
Indeed. And this isn't just about, reciting quarterly numbers. It's more like a snapshot, right? A snapshot of how a major player is responding, or maybe even shaping the response to these huge shifts in tech.
Especially AI adoption.
Exactly. The speed of AI adoption is just, well, it's creating totally new challenges, but also opportunities in cybersecurity. Our mission is to get past the headlines, pull out the real insights, and, connect the dots for you.
Right, so you can really grasp the deeper implications for this whole vital sector.
Precise.
Okay, so we'll be looking at how this company is setting new benchmarks, their bold bets on integrating solutions into platforms.
The whole platformization idea.
Yes, exactly. And what they see as the next big thing in protecting our digital lives. It's complicated stuff, but it offers some amazing insights into where things are heading.
Absolutely.
Okay then, let's unpack this. So, we've kind of set the scene. Let's really dig into the numbers now because they really tell a story here. This past quarter was, well, a landmark period for them, wasn't it?
It really was.
Seems like it capped off a year of disciplined execution and some serious strategic acceleration. The figures coming out are genuinely impressive.
They are striking. I mean, what jumps out immediately is just the scale.
Yeah.
This company, they're now the first dedicated cybersecurity firm to actually surpass a $10 billion revenue run rate.
$10 billion, that's significant.
It's huge.
Yeah.
And it's not just a number, right? It reflects years of anticipating where the market was going, building the future of security before it even got here, in a way.
So foresight paying off.
Definitely. And that kind of scale gives them huge advantages, in R&D, market reach, things smaller players just can't match.
And it seems they're not just hitting that $10 billion mark and stopping. Their focus is already shifting, right? Leveraging that scale to define what's next.
Absolutely. No resting on laurels here.
Which is good to see. We also saw their bookings growth really turn a corner. Highest point in, 2.5 years?
That's right.
So what drove that surge? What's behind it?
Well, what's interesting is that it was really broad-based growth. That's always a healthy sign.
Okay, not just one big deal.
Exactly. It was a mix, these big strategic platform deals where customers are really integrating deeply,
right?
But also strong renewals and upsells from their existing customers. And they have a massive base already.
So people are sticking around and buying more.
Precisely. It shows they're not just making one-off purchases. They're committing long-term, expanding their engagement. It really points to a deep level of trust and, satisfaction with the value they're getting.
Especially as security gets more complicated.
Exactly. Once you're in, you tend to stay and grow.
Okay, speaking of long-term commitments, they also reported strong growth in RPO remaining performance obligation, up 24% year over year to $15.8 billion. Now, for listeners maybe not deep in financial metrics, what does RPO actually tell us? Why is it so critical?
RPO is absolutely crucial for visibility. It's essentially the value of contracted future revenue that hasn't been recognized yet.
So it's like a backlog, money already in the pipeline.
Pretty much. It's a window into their future earnings potential. And the acceleration they saw here.
Yeah.
It was their highest RPO growth in 7 quarters. And remember, this is at a much larger scale now.
Right.
So it signifies really significant long-term customer commitments to their platforms.
Yeah.
A big chunk of future revenue is basically locked in.
Which gives them predictability.
Huge predictability. And a solid foundation for their planning. It really bodes well for their long-term targets, especially for that platform business.
Okay, let's drill down a bit more. Next Generation Security, or NGS, their annual recurring revenue there grew 32% to $5.58 billion.
Very impressive growth.
Within that segment, what were the real standouts? Where's the momentum?
Well, they saw strong contributions pretty much across the board in NGS. But particular strength came from size.
Secure Access Service Edge.
Right. That convergence of network security and WAN in the cloud. Also, their XIM platform, the Autonomous Security Operations one,
We'll definitely talk more about that.
and software firewalls, their big investments in these areas are clearly paying off.
Especially with everyone moving to hybrid multi-cloud setups.
Exactly. Those aren't just point solutions anymore. They're foundational. And these areas have huge addressable markets. So their performance here really backs up their conviction about hitting that ambitious $15 billion NGS ARR target by fiscal 2030.
15 billion. Wow. So they're really capturing share in these critical future markets.
And positioning themselves for sustained leadership, it seems.
Okay, this leads us nicely into a concept they really push, platformization. It sounds like customers aren't just buying products off the shelf anymore.
Not at all.
It's more like buying into a whole strategic partnership, an ecosystem.
Mm.
So what does platformization actually mean for the customer and for the company's strategy?
Yeah, platformization is really about moving away from that old model, stitching together dozens of different security tools from loads of vendors.
The vendor fatigue problem.
Exactly. So instead, customers are actively consolidating, simplifying their security stack by adopting these integrated best-of-breed platforms.
Okay, so simplification is key.
It is. But the bigger benefit, honestly, isn't just cost savings, although that's part of it. It's about much better security outcomes.
Like what?
Well, tangible things, like
Yeah.
way faster incident response times, a better user experience for the security teams. They're not juggling 10 different dashboards. And removing that huge operational burden of trying to make all these separate products talk to each other, keep them updated.
It's a nightmare.
It is. So the company's bet is that these integrated platforms deliver better security. And the key thing is, customers seem to be agreeing, making these larger, more strategic commitments.
It's a shift from products to outcomes.
Precisely. Addressing that fatigued security leaders feel from just having too many tools.
That really makes sense. Getting more value, less complexity, that's the dream for many organizations. So how do we see this value reflected in their actual customer relationships? Where's the proof?
Well, the proof is definitely in the numbers.
Hmm.
Look at their net retention rate for platform customers.
Yeah.
It stood at an impressive 120%, with nearly zero churn.
120%. So customers are not just staying, they're spending 20% more year over year.
On average, yes. They're adding more modules, expanding usage, deepening that commitment, and almost nobody is leaving.
Wow, that's exceptional in enterprise software.
It really is. It's the ultimate proof of the value they're delivering, and it shows these deep strategic partnerships being built. They're not just a vendor, they're becoming integral, almost embedded in the customer strategy.
Which must give them a strong foundation for growth.
Absolutely. And it backs their goal to more than double these platform engagements in the next 5 years. It also means switching costs become pretty high for customers, which helps lock them in.
Right. Okay, let's make this concrete. Let's look at some real-world examples, these big deals that show platformization in action.
Good idea.
First, there was a leading global consulting firm, signed a deal over $100 million cloud security, SaaS, and it even included their new AI access security product.
Yeah, that's a classic example. This firm had some really common but critical problems.
Funches.
They lacked proper identity controls over their growing AI and cloud environments, a huge blind spot.
Okay.
And they urgently needed a comprehensive, globally scalable, secure access solution for their huge network of employees and clients worldwide.
So this deal fixed that.
It was transformative. It turned them into a fully platformized customer, adopting a whole suite of integrated solutions. And that single deal, it's generating $50 million in ARR for the company.
50 million annual recurring revenue from one deal.
Yeah, it shows the massive impact of these platform deals compared to just selling individual products.
Yeah.
And critically, it took deep C-suite relationships to make it happen. It was strategic, not just technical.
Understood. Okay, next example. A leading European bank. A deal worth over $60 million. Banks are always interesting digital transformation leaders, but also prime targets.
Precisely. The stakes are incredibly high for them. This bank was going through a major digital transformation, which naturally expands their attack surface and complexity.
Right.
So they adopted the XIM platform to tackle that expanding attack surface, simplify their likely fragmented security setup, and also control those spiraling security costs.
Platformization was the edge here.
It really was. It wasn't just about having good products. It was the integrated solution, the promise of a unified outcome. This deal solidified the company as a true partner, with the bank now using 3 of their core platforms.
Shows the consolidation isn't just about cost, but better security and efficiency.
Absolutely. especially against sophisticated threats.
Okay, one more. A leading U.S. insurance company. They bought $33 million worth across network security, SECSI, security ops, and cloud security. Again, hitting multiple areas.
And this customer had very clear goals: improve their overall security posture, boost their SOC analyst capabilities because analysts get overwhelmed.
Totally. Alert fatigue is real.
It is. And they wanted to drive automation to hit a really ambitious target: a 15-minute mean time to contain incidents.
15 minutes. That's fast.
Incredibly fast. Every minute counts in a breach. And achieving that meant using AI and machine learning not just as buzzwords, but practically.
How so?
To assist the analysts, reduce the manual work, and critically cut down on those false positives that swamp the SOC teams.
Right, so analysts can focus on real threats.
Exactly. So this deal is a perfect example of how platformization enables better outcomes. It's about transforming the whole security operation, moving from reactive to automated rapid response.
Got it. A real shift in capability.
Definitely.
Okay, it's impossible to talk about cybersecurity now without talking about AI. It's clearly not just hype, it's fundamentally changing things at an incredible speed.
Yeah, it is.
But as they said, this reweaving of the technological fabric brings a whole new complex attack surface. How is the cybersecurity world, and this company specifically, dealing with this AI-driven shift?
Well, the speed of AI adoption is just unprecedented. They did an internal study among their customers. Gen AI traffic was up over 890% in 2024.
890%. Wow.
It's an explosion. And predictably, data security incidents related to Gen AI more than doubled since last year.
Oof. That's concerning.
It really highlights that security can't be an afterthought anymore, a bolt-on feature. It has to be foundational, an enabler for any successful transformation involving AI.
Because all these new AI use cases, productivity tools, coding tools, chatbots, they all need protection.
From the ground up, they're interacting with sensitive data, critical processes. You have to secure them inherently.
And it looks like they're tackling this proactively. They acquired a company called Protect AI recently. How does that fit into their AI security strategy?
That acquisition, combined with their existing native AI firewall capabilities, it's really driving conversations about securing the AI infrastructure itself.
So not just the endpoints, but the AI models, the data.
Exactly. It's a proactive move. They're not waiting for the AI attack surface to become a massive problem. They're addressing it now. Thinking about protecting models from theft or manipulation, securing the training data, the apps built on top.
The whole AI supply chain.
Precisely, from development right through to deployment.
So how are they actually equipping organizations to use AI confidently? What are the specific tools or platforms they're offering?
Well, early in Q4, they launched Prisma AIRS. They're calling it the industry's most comprehensive AI security platform.
AIRS AI runtime security?
Something like that, yes.
Yeah.
The idea is it's a unified platform giving organizations end-to-end security for AI.
Covering what exactly?
Everything. The applications talking to AI, the AI agents doing tasks, the models themselves, the data sets feeding them. The goal is to close those blind spots that traditional security tools might miss in AI environments.
And ensure compliance too, I imagine.
Definitely. Especially with AI regulations still evolving globally. It's like a security umbrella specifically designed for AI's nuances.
Okay, but securing the AI you build internally is only one part of the puzzle, isn't it?
Absolutely.
What about employees using all those third-party AI services? Public Gen AI tools popping up everywhere, that seems like a huge data leakage risk.
It is. And it's a critical distinction many companies are wrestling with.
Yeah.
So while Prisma AIRS focuses on the AI you build,
Right.
their AI access solutions are designed for the other side, providing visibility and granular control for the safe use of those external AI services.
So they're tackling both sides, building AI and using external AI.
They claim to be unique in offering a strategy for both. And a key part is integrating data loss prevention, DLP controls.
To stop sensitive company data from ending up in a public AI model.
Exactly. And this comprehensive vision covering internal and external AI seems to be resonating with customers dealing with, the explosion of AI use, often shadow IT, across their workforce.
Makes sense. Okay, shifting gears slightly, but still related to new frontiers. They mention browser wars. That term takes me back. How is the browser becoming the new OS for the enterprise, and what are the security implications?
It's a really profound shift, actually. Think about it. Employees use browsers for almost everything now, right?
Yeah, SaaS apps, cloud tools, AI interfaces.
Exactly. So the browser naturally becomes a huge target for attackers, It's not just a window anymore. It's the gateway to company data and applications.
So the company is positioning their Prisma Access browser here.
Strategically, yes. They believe it's set to become the de facto operating system for secure, productive work in this AI-driven world.
More than just secure web browsing.
Much more. It's about the browser being the conduit for critical business functions. And with agentic AI, coming AI agents acting autonomously within the browser.
You absolutely need to control that browser environment.
Imperative. They predict companies will likely start banning consumer browsers that lack enterprise controls, just like they do with other unmanaged software.
So the secure browser becomes part of the SAE stack.
An integral, non-negotiable part is their view.
And the adoption numbers seem to back this up. Over 3 million licenses sold in Q4 alone, doubling their total seats to over 6 million.
Yeah, the growth is massive. It shows organizations feel this need right now. That included a big $3 million deal with a major U.S. pharma company for over 80,000 seats.
Wow.
And the key is the controls and visibility built into Prisma Access Browser. It's designed to keep sensitive data safe during browsing, no matter where the user is or what app they're using.
So protecting data at the point of interaction?
Exactly. As more critical stuff moves into the browser, it becomes the prime target. So they're building security right into that browser OS. Proactive defense at the edge.
Got it. Okay, let's pivot to network security. Still a massive chunk of their business, right? Over 75% of bookings.
Still foundational, yes. But the nature of that business has changed dramatically.
How so? What's the evolution there?
Well, over the last 5 years, there's been this huge shift. Over 60% of their network security bookings now come from software form factors.
Meaning SISs and virtual firewalls, not the physical boxes.
Precisely. It reflects how enterprise IT has changed. The old idea was maybe you'd rely on one cloud provider for security.
Right.
But the reality, 80–90% of the Fortune 500 are multi-cloud now.
So you need security that spans all those clouds.
Exactly. You need that single pane of glass, which favors providers like them who offer native software firewalls across all the major clouds, AWS, Azure, GCP.
For consistent policy and visibility everywhere.
Correct. It solves a huge pain point for big companies.
And they seem to be leading this, mentioning nearly 50% market share in software firewalls, native in all major clouds.
They have a significant advantage there, yes. And they just signed a $60 million deal, expanding a partnership with a big U.S. cloud provider, cementing that position further.
What about deployment? Is software faster than hardware?
Oh, it's a game changer. Hardware can take 6 months or more, right? Ordering, shipping, testing, installing.
Yeah, the whole physical process.
Software firewalls, they can be provisioned in under 24 hours and scaled instantly.
Wow.
No shipping, no racking. Plus, you can upgrade features or apply patches instantly. It's just way more efficient and agile for today's threat landscape.
And more valuable long-term.
Apparently so.
Yeah.
They noted a SaaS deal can be 2.5 times larger in lifetime value than a typical hardware firewall deal. It really shows the shift from one-time hardware sales to recurring software services.
A fundamental change in delivery and monetization.
Absolutely.
Okay, let's move to Cortex and cloud. We saw strong growth there too, combined ARR up nearly 25% year over year. What's driving that, especially in security operations? CCOPs, how are they shaking up that space?
Well, CCOPS was stuck for years in what they call the old SIAM paradigm.
Security information and event management, collecting logs, writing rules.
Right. And overwhelming analysts with alerts, loads of false positives. That model just doesn't work against today's AI-powered attacks. It's too slow, too reactive.
So what's their answer?
Their XIM platform, the autonomous SOC platform. It's all about modernizing CCOPs using AI deeply. And it's their fastest growing product ever.
What kind of results are customers seeing?
Pretty incredible stuff. Reducing mean time to respond from potentially weeks down to minutes. Over 60% of deployed customers report a response times under 10 minutes.
Weeks to under 10 minutes. That's transformative.
It really is. It turns security from reactive to proactive automated defense.
And they have around 400 XIM customers now, with average ARR over $1 million, including big Global 2000 companies.
Yeah, it shows it's resonating with large, complex organizations. It's not just incremental improvement. It's changing how security teams work.
What about the cloud side, Cortex Cloud?
That's proving their thesis about the convergence of cloud security and CCOPs.
How so?
Well, others might offer separate tools, a CNWPP for cloud posture, a separate CIEM. They unify a best-in-class CNWPP with their AI-powered SOC platform.
So connecting cloud security directly to their response engine.
Exactly. It lets customers go beyond just reporting cloud misconfigurations to actively stopping cloud attacks in real time.
So not just shift left in development, but also shield right in production.
That's the idea. A stronger, more adapted defense across the whole lifecycle.
And they're leveraging this integrated data for more than just stopping attacks, these new peacetime missions like exposure management.
Yes, this is their data-to-market engine in action. All that integrated data from network, cloud, SOC, that's the ground truth needed for effective AI.
The fuel for XIM's wartime mission.
Exactly. But now they're using that same powerful correlated data for these peacetime missions too, applying AI to find security gaps before they're exploited. That's exposure management. And improving email security.
Creating new markets from their existing data.
Right. An estimated $18 billion opportunity there. It shows how they can continuously explore new areas and deliver more value to platform customers by extending the use of their core data. It's a virtuous cycle.
Data, insight, new products. Very smart. Okay, beyond organic growth, there was huge news. The proposed acquisition of CyberArk.
Massive news.
CyberArk is almost synonymous with identity security, especially privileged access. What's the thinking behind this major move, especially now? Why is identity so critical?
The core belief is that the identity market is hitting a major inflection point. Right now, basically, next 12 to 24 months.
Driven by what?
Primarily by the rise of agentic AI. These AI systems acting autonomously.
Back to the AI agents needing identities.
Exactly. They see identity as a key enforcement point, as fundamental as network firewalls, maybe even more so in some ways. And crucially, identity is becoming a real-time thing, needing continuous monitoring, not static management.
Because if an AI agent's identity is compromised,
The potential damage could be huge, given the access they might have.
they dropped a scary statistic. 90% of breaches involve stolen or mismanaged credentials, and that every user, machine, and AI agent should be treated as privileged.
Precisely. That context really highlights why security-focused identity vendors are best placed, especially leaders like CyberArk. They already protect millions of privileged users, over half the Fortune 500.
So the acquisition isn't just about PAM, but a broader identity play.
It's about deepening PAM penetration and targeting the much larger base of general identity users and all those machine identities that are exploding in number, building a truly comprehensive security posture around identity.
Is the identity market itself quite messy right now?
Very fragmented. Over 100 vendors, apparently. There isn't really a broad, unified platform.
Which leads to complexity and gaps for customers.
And contributes to breaches. So the plan is to accelerate CyberArk's platform vision, combine their identity leadership with Palo Alto's AI security platforms and market reach.
To offer a complete integrated solution.
That's the goal. Simplify things for customers, provide a holistic view, and ambitiously they aim to double the value of the combined businesses in 5 years. It's a strategic move to define the next chapter of security for the AI era.
Wow. Okay, amidst all the strategy, there was also a big leadership change. The founder, Nir Zook, is retiring after over 20 years.
A true industry legend.
What's his legacy? And who's stepping up to guide the tech vision now?
Well, his impact is just immense. He pioneered the next-gen firewall, fundamentally changing network security, moving beyond ports and protocols to applications and users.
That was revolutionary at the time.
Absolutely. And his legacy is deep in the company culture, that competitive drive, the relentless innovation, always looking ahead. It's in the company's DNA.
So who takes the reins on the tech side?
It seems like a very seamless transition. Lee Klarich will now be both Chief Product and Technology Officer, and he's also joining the board.
Lee's been the chief product architect for ages, right? Turning Nir's vision into reality.
For almost as long as Nir. So this appointment shows huge trust. It ensures that innovative spirit doesn't just continue, but hopefully accelerates. Speaks volumes about their internal talent depth.
Good point. Okay, let's touch on the financials underpinning all this. Fiscal year 2025 results looked pretty strong.
Very solid. Total revenue hit $2.54 billion, up 16%. Product revenue grew even faster, 19%, mostly driven by software, which fits the strategy.
Right, the shift from hardware.
Gross margin was healthy at 75.8%. And critically, they expanded operating margins significantly, 340 basis points in Q4. They actually hit over 30% operating margin for the first time ever.
30%, wow. And for the full year?
28.8%, which was above their guidance. Shows strong cost management and scalability, even while investing heavily.
They also beat on EPS and mentioned the rule of 50.
Yeah, non-GAAP EPS was 95 cents ahead of guidance. And they're proud of hitting that rule of 50 for 5 years straight.
Remind us quickly, what's the rule of 50?
It's a common benchmark in enterprise software. Your revenue growth percentage plus your operating margin percentage should add up to 50 or more.
So balancing growth and profitability.
Exactly. Consistently beating it shows they can deliver strong growth while also generating good free cash flow margins. It signals operational excellence.
And they generated a lot of cash.
$3.5 billion in free cash flow for fiscal 2025 at a 38% margin. And they expect to beat the rule of 50 again in fiscal 26.
So looking ahead to fiscal 2026, what's the guidance?
They're projecting NGS ARR between 7.0 and $7.1 billion. That's 26-27% growth.
Strong growth continuing there.
RPO expected between 18.6 and $18.7 billion, up 17-18%. Overall revenue around $10.5 billion, roughly 14% growth.
And margins and earnings.
Operating margins expected between 29.2% and 29.7%, and non-GAAP EPS $3.75 to $3.85, up 12-15%. So continued solid performance expected.
Okay. And what about that longer-term free cash flow target for the combined company post-CyberArk? That seemed quite ambitious.
Yeah, they're targeting adjusted free cash flow of 40% plus for the combined entity in fiscal 2028. That would be the first full year after integrating CyberArk.
40% plus free cash flow margin, that's huge.
It is. Their confidence comes from continued operating margin expansion and better visibility into cash flows from their move to deferred payments. It really underlines that they're doing this CyberArk deal from a position of financial strength.
Not out of necessity.
Exactly. Aiming to define the future, funded by current success.
So, as we wrap up, it's clear AI is profoundly changing things. Enterprise security, our daily digital habits, the lines are blurring.
Completely.
We heard today about a potential future where maybe employees can't even use regular browsers for work, where security is consolidated to fight AI threats in minutes. What does that mean for us as individuals, for our digital footprint?
That's a big question.
Are we heading towards a world where this kind of built-in, proactive security isn't optional, but just a fundamental part of every tool we use? And what does that mean for our privacy, our autonomy?
Yeah, how does that balance play out?
Definitely something worth thinking about long after we finish here. Thank you so much for tuning to the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.